Let's turn to business news first with Giles Beckford and The Warehouse. Hi, Giles, beaming in from Wellington, our business editor. And The Warehouse is getting rid of a problem child. It's selling its consumer finance arm.
Good evening to you, John. Yes, it has. It's been barely 18 months since Warehouse took control of the finance arm. It bought out Westpac in mid-2015, and it's a firm that offered the hire purchase agreements, consumer insurance, credit cards, that sort of thing. It's pretty standard. Fisher & Paykel had a long-running and very profitable consumer finance operation. But it's been bleeding money almost from day one. By my tally, in the 18 months or so, it's owned it. The group has lost somewhere around $11 million in operating costs, and it has written off close to $50 million in IT systems, goodwill and the like. So it's been a millstone around the company's neck, especially at a time when the red sheds have been under pressure. It's been struggling to get a real foothold on the online market. And from that point of view, it was a distraction it didn't need. So it's cleaned it up off the balance sheet. It sold it to a subsidiary of the SBS Bank, the old Southland Building Society. The company's called Finance Now. It's gone for $18 million. The warning is that there will be another hit of $16 million as it writes down the value in the accounts coming up in a month or two. One thing is that the company's still sticking by its expectation that its broad profit for this current year will be somewhere in the region of $54 to $58 million, but certainly one that the Warehouse will be pleased to see the back of. It never got a bargain on that one.
No, how did the market respond to this, Giles?
It wasn't too bad, actually. They saw it as a positive move. The share price was up 5 cents. Okay. That's a couple of percent. I might say that just from my casual observation, I wonder whether the stock exchange might take a close look at some of the recent share trading in the Warehouse, and that it'd been falling rather dramatically, almost 21% so far this year. But in the past week, it just managed to edge up 8%. And they are, of course, always vigilant about such things.
Yeah, that's curious. The NBR Rich List, the annual Rich List out today, Giles.
We didn't make it. No. And I can sense your disappointment from here, John. I know you only got in last year because I stuck your photo over somebody's entry. Yeah. And we've got complaints of misleading advertising on that one as well. The theme of this year's Rich List is that the rich have got richer, which is a surprise, apparently. But, of course, they've done it. A lot of it, of course, is property, and it's gone up in property valuations, or if they own shares, then it's been the rise in the share market, which is up somewhere in the region of 12% so far this year. There are some new entrants there, people who clearly always had the wealth, but it just was a little bit below the radar. One of those, a very pleasant man, Bruce Lindsay, who was in charge of, or who owned the Systema plastic packaging company, which he sold for $650 million earlier this year. So he ends up there. No surprise, Graham Hart is at the top of the list. He's had to struggle with only adding $500 million extra to his $6 billion or whatever it is. And the instant New Zealand citizen, Peter Thiel, comes in at number 2 with around $3.5 billion. Tally it all up, there are 208 people on the list, or family groups on the list. They collectively have around $80 billion. That's just under a third of the country's gross domestic product. Wow. And I might say that not everybody has welcomed the appearance of the Rich List. One Auckland University academic, Ronald Kramer, is quoted as saying that it encourages people to value wealthy people and wealth at the expense of social considerations. In his words, it's ideological, comes out in publications owned by wealthy people, produced for mass consumption, but targeted at relatively wealthy consumers. And I have to say that coming from a publicly owned broadcaster, no one can accuse us of that.
No. Giles, what did the markets do today?
The share market just up modestly, up 11 points for the top 50 at 7682. The New Zealand dollar sitting around 74.3 US cents and 93.7 Australian.
Giles Beckford, our business editor, thank you.